And so we have been severely compromised in critical areas of both human as well as physical infrastructure, because we have had to be dedicating far too much of our resources to the problem of debt servicing. And I'll come back to that briefly to indicate to you part of the strategy in how we are dealing with it. But then to come back to the crisis of the moment, the immediate impact that it has had upon us is that we have seen a drying up of liquidity on the international market, which of course that drying up of liquidity has also affected the liquidity requirements of the country. And so we've seen what you call margin calls, where a number of our securities dealers were exposed and to funds that they had borrowed, funds that are collateralized, some of them collateralized by Government of Jamaica bonds, but that they were exposed to margin calls, some of them from Lehman Brothers and some of the other entities that were distressed, some of the other toxic entities. And so we had to act quickly. The governor of the Bank of Jamaica set aside a $300 million US fund to deal with those margin calls so that we wouldn't have any sort of, onset of instability within the system. We could not tolerate it. We could not afford it. And so I'm pleased to tell you that of that amount of $300 million, some $170 million has been used up in that liquidity window. And as of now, over the past 2 weeks, there has been zero demand on that fund for additional liquidity. So that, in a sense, our quick response in providing that liquidity support actually helped to provide confidence even to some of the external people who didn't really need to make margin calls. But if they felt that there was a sense of uncertainty, then that would drive them to make the margin calls. Once they saw that the Bank of Jamaica had set aside this and was honoring the commitment, then we have seen a significant drying up of demand for that at this stage. We have had to do other things because coming as a result of the closing off of lines of credit, access to credit, trade credits, and so on, both for importers as well as manufacturers who are importing raw materials and so on, have seen lines of credit virtually dry up on them, or the turnaround time is no longer, say, 2 months or more, but now it's either a month or 2 weeks, so that has had its own impact. And we have responded there as well by getting the Export-Import Bank to provide additional support, especially to the manufacturers. But there is no question that part of the pressure that we have seen that has been developing on the exchange rate in recent weeks has come about in part because of this drying up of these traditional lines of credit to which we have had access over the years. And that has helped to put pressure on the exchange rate. The governor of the bank has had to be taking some strong action in that regard in seeking to protect our exchange rate. The exchange rate is not uncompetitive. It is competitive. I want to make that point and make it very strongly. So the exchange rate is not devaluing because of a perception that it's uncompetitive. It is not uncompetitive. The truth is that we have had to take action, and I want to indicate to you that it is my own desire, and it has been quite adequately, in my view, communicated to the governor of the Bank of Jamaica, that the measures he has taken, including the hiking interest rates, and the question of the imposition of a higher cash reserve ratio, must be seen as temporary intermediary measures that can just help us to tide over this period where, remember, between September and November anyway, it has always been seasonally a low period for foreign exchange coming into the country. So that also added and exacerbated the problem. But going forward, I want to assure everyone that steps that we have taken, not since Lehman Brothers, but steps that we have taken that were taken proactively from the time of the change of government, are now beginning to bear significant fruit. And why do I say that? Let me indicate that before we came into power, I made it one of the philosophical, ideological, and policy directive that the government of Jamaica, under this party, the Jamaica Labour Party, would be re-engaging on an intensive basis with the multilaterals. Intensive. And the reason is very simple. The multilaterals from the time before the crisis have money, cheaper money. And we kept being told by the former Minister of Finance that Jamaica doesn't qualify to get funds from multilaterals. I think I've already broken the back of that theory, because since coming into power, we have already raised $300 million from the IDP, the World Bank, and the Caribbean Development Bank. Tomorrow, I leave for Washington to sign an agreement with the Executive Vice President of the IDB for US $101 million in policy-based loans. And in January, we are anticipating, and I don't want to preempt my friend Bajol or his superiors, but we've been working quite a bit with the World Bank on their own DPLs, and we are anticipating that in January we will be signing a substantial loan agreement with the World Bank as well. And all of that combined with a US $300 million liquidity support program that we are negotiating, well, we have finally finalized virtually with the IDB for direct support to the commercial banks. All of that, when you tot it all up together, you're talking about close to $1 billion United States dollars that will come into Jamaica since the beginning of this administration through to the end of the fiscal year that we are in now. And I'll say to you without any fear of contradiction whatsoever, that bringing in a billion United States dollars into Jamaica in such a short period of time from our multilateral partners is an unprecedented event. Never has happened before in Jamaica's history. And it is significant because some who are cynical say, well, Mr. Shaw has come on board and he's bragging about being able to borrow money. Well, the truth is, from before we got into power, the budget was being financed 50 to 55% revenue, 45% borrowings. And these borrowings are either rollovers to replace other instruments or fresh or new debt. So I ask you the question as development partners, how could I have taken over as Minister of Finance, and within the first year, I cut out 45% borrowing and I financed the budget just from revenue? Tell me how could I do that? It would be impossible. And what would have happened is a social dislocation of unimaginable proportions. I could not even begin to describe what would happen if we were to take out 45% out of our budget, stop borrowing altogether, freeze everything, and try to live off of the 55%. Couldn't work. What was my alternative? Cheaper money. It's a no-brainer. Instead of going for money at high interest rates, 15%, and even on the international capital markets, which was the former minister's favorite shopping ground, most of the debts that we are servicing there now are priced in between 10 and 12% interest rates. Too high on the international capital markets. And so I say without apology that I've gone to our development partners, the IDB, the World Bank, the Caribbean Development Bank, and not to forget the significant support of the European Union as well, in terms of their grant funding and their commitments going forward over the medium term to significant additional resources for Jamaica.